Hi everyone, I'm Basil Neelambra, tutor for Audit and Assurance. In this video, I'm going to debrief case scenario number 2 of pre-September 2024 mock exams of ACCA, which is available in ACCA Practice platform. So as I've told you in the previous part, in your examination, in section B, there will be audit risk case scenario, internal control deficiency case scenario, and substantive procedure case scenario. The audit risk case scenario was discussed in part 1, which I have uploaded in my YouTube channel. In this part 2 video, we are looking into internal control deficiencies, control recommendation, and test of control, as well as a corporate governance question. So without wasting our time, I'm starting our session, and that is question number 20, which is a case scenario, which is asking you to identify and explain 3 deficiencies in JJE's payroll system and provide a recommendation to address each of this deficiency. So let's quickly read the scenario. You're an audit supervisor with Audit and Company and are currently in charge of 2 clients, JJ Electrics and Laszlo. It is 1st July 20x5, and John Junction Electric Company, JJE, is a manufacturer of electrical equipment. The company's year-end is 30th September x5. You're currently reviewing notes in relation to internal controls in place at JJE. JEE has a workforce of 90 employees who monitor the machines. The company manufactures 24 hours a day, 7 days a week. The company operates 3 shifts every day with employees working 8 hours each. They are required to clock in and out using an employee swipe card, which identifies the employee's number and links into hours worked report produced by the computerized payroll system. Employees are paid on an hourly basis for each hour worked. The payroll department calculates on a weekly basis the cash wages to be paid to workforce based on hours worked report multiplied by hourly wage rate with appropriate tax deduction. As these calculations are generated by payroll system with low chances of error, they are not checked. That is a deficiency. Payroll calculations are not checked. If payroll calculations are not checked, what might happen? That is your explanation. The calculations may be wrong. It can be overpayment of wages resulting in increased payroll cost, or it can be underpayment of wages resulting in loss of employee goodwill. And what will be the control recommendation? That's pretty much simple. The payroll calculation should be reviewed by a responsible official and evidence the review. Deficiency 1, identified, explained, and recommendation provided. During the year, hourly wage was increased by HR department, and this was notified to payroll department at a team meeting. There are 2 problems in this one. One, the hourly wage increase is being done by HR department. HR department should not increase wage. Wage can be proposed by HR department, but it should be authorized by board of directors. So if HR department is authorizing it, there is unauthorized wage increase, point number 1. And point number 2, this wage increase was notified to the payroll department in a team meeting. That means it was notified orally. So oral is a deficiency. It should be written. So increase of wage rate is unauthorized, and it might result in increased payroll cost, increasing wage of friends or family. And this increase was notified in a team meeting orally and is not written. So that is our explanation. Now, what will be your control recommendation? That is pretty much simple. 1, increase of wage should be proposed by HR department, but approved and authorized by the entire board of directors. And second one, written notification of wage increase should be notified to payroll department. And the last paragraph, and I'm just quickly going to highlight this because I hope you have already done this pre-September mock exam. So if any night shift employees are absent on payday, then the factory supervisor keeps the wages and returns them to the payroll department on Monday. So the money is being stored by the supervisor. So there's a chance that it can be misappropriated by the supervisor. Money is not safely kept. So what will be a recommendation? The pay packets of absent employees should be securely stored at JE and it should be banked on Monday, or it should be given to employees on Monday. That's it. The first question, 3 deficiencies and providing a recommendation is over. Now moving on to the next question, question number 21. The B question is asking you to, in respect of inventory count procedures for JJE, identify and explain 3 deficiencies, recommend a control to address each of these deficiencies, and describe a test of control. So remember, test of control is an audit procedure and try to obtain documentary evidences as far as possible. So the examiner expects you to write an audit procedure, state how you are going to do that audit procedure, that is, which ledger or document are you going to verify, and why are you verifying that document should also be mentioned. And if you're writing inquire management or discuss with management, you have to state what are you inquiring or what are you discussing as well. So now the inventory count, let's identify 3 deficiencies, explain it, provide a recommendation, and state how to test this control. So reading the first paragraph of inventory count, JJE is planning to undertake a full inventory count at the year end of its raw material, work in progress, and finished goods, and you will be attending this count. The count will be undertaken by 10 teams of 2 counters from the warehouse department, with a senior official from JJE's finance department providing overall supervision. So the count is undertaken by 10 teams of counters from the warehouse department. So that is a deficiency. The warehouse team are counting this. How will you explain this deficiency? There is lack of segregation of duties because these employees are responsible to record and keep the inventory as well as count it. So these employees will be able to conceal any fraud or error they have committed. And it results in inventory being materially misstated. So what will be your control recommendation? The count team should be selected from employees outside the warehouse department or from alternative departments. Finance department, HR department, marketing department employees should be counting, not the warehouse department. Now, how will you test this? You have given a control recommendation. The control recommendation is that employees should be from a different department. How will you test that the employees are from a different department? That is your test of control. There are 2 ways. Method number one, test of control number 1, inquire the counters, which department do they belong to? If they say we are from finance department, if they say that we are from HR department or marketing department, then we know that our control recommendation that it should be from a different department has been implemented. But the latest examiner's report has stated that the examiners, the markers expect you to come with a documentary evidence if possible. So the documentary evidence in this case will be inspect, that is the audit procedure, counting instruction, that is a document. Why are you inspecting the counting instruction? To confirm it is sent to an alternative department or it is sent to departments other than warehouse department. So deficiency number 1 identified, explained, given a recommendation, also test of control. Now moving forward. Each team of 2 will be allocated a number of aisles within the warehouse to count, and they will be provided with sequentially numbered inventory sheet, which contain information from inventory record, product codes, and quantities. That is a deficiency. Inventory sheet contain quantities. So how will you explain that deficiency? If the quantity is mentioned, the counters will simply agree to the quantity without actually counting it, which will result in inventory being materially misstated. What will be your control recommendation? Pretty much simple. The inventory counting sheet should only contain product codes. It should not contain quantities. How will you test it? How will you test that inventory sheet contains only code? Very simple. Inspect inventory counting sheet to confirm it contains only product codes and it does not contain quantities. Then two deficiencies identified, explained, given recommendation, and test of control. The last one, the counters will move through each allocated aisle, counting inventory and confirming that it agrees with the inventory sheet. Where a difference is found, they will note this on the sheet. The warehouse is large, and some of the aisles have been rented out to third party with similar operations. These are scattered throughout the warehouses. So that is a deficiency. The some of the warehouse is rendered to third party who has similar operations and their inventory is scattered throughout the warehouse. So how will you explain that? There is a chance that JJE's counting team might wrongly count and include this inventory of third party as JJE's inventory, which will result in overstatement or overvaluation of inventory. What will be your control recommendation? The third-party inventory should be stored separately, marked, and should not be counted at all. How will you test it? Very simple. Inquire the count supervisor where the third-party inventory is stored and inspect the inventory counting sheet. Why? To confirm the third-party inventory is not included in the counting sheet. That's it. Three deficiencies identified, explained, given a recommendation, as well as test of control. Now, finally, in the last paragraph also, there is a deficiency, which I have not written because they're asking only for three deficiencies. But let us discuss that as well. Some of JJ's finished goods are high in value and are stored in a locked area of the warehouse, and all counting team will be given the code to access this area. So how will you explain that? Since the code is given to every counting team, anyone from the counting team can access that high value inventory, steal it, that is misappropriated. There is a chance for misappropriation of inventory, that is fraud. What will be your recommendation? What will be your control recommendation? Very simple. Only senior counters should have access to this particular code. And once that count is over, the code should be changed. How will you test it? Attempt to access the high value inventory. It should not be possible without the code. So there are actually 4 deficiencies in the system. The question is asking only 3. So the most important thing is that which 3 will you select? You have to first read the scenario, highlight the deficiencies, and select 3 deficiencies that you can explain properly and give proper control recommendation. And most importantly, give a proper test of control the way marker wants to see it. Remember, test of control is an audit procedure, and every audit procedure should contain an audit procedure, a documentary evidence, which document are you verifying or which ledger are you verifying, and most importantly, why are you verifying this particular document should be mentioned. So select the deficiency that you can structure properly. And in test of control, where you are writing inquiry management or discuss with management, make sure you are writing what are you inquiring or what are you discussing with the management. For example, in the last one, we have written inquire count supervisor. What were you inquiring? Where the third party inventory is stored. So moving on to the next question. Now, this is a corporate governance question. They're asking, discuss the benefit of Laszlo's company of forming an audit committee. Now, if you have learned corporate governance and attended my classes, I very clearly stated to my students, in corporate governance, there are a few direct theory questions, which ACCA calls as narrative questions, which are quite frequently asked. One is role and responsibility of audit committee. Second one is advantage of having audit committee. And third one is disadvantage of having audit committee. And you can see that the pre-September 2024 mock exam contains one such direct theory question from the corporate governance, the benefits of forming an audit committee. But the most important thing you have to understand, it's not completely a direct theory question, because they are very specifically asking what is the benefit of Laszlo of forming an audit committee. So it is related to a scenario. So you have to fine tune your direct theory questions according to the requirements of the scenario. That means you have to link your answers to the scenario. So let's read the scenario. Laszlo company designs and manufactures luxury motor vehicles. It employs 2,500 staff, and its shares are held by 15 individuals, most of them from the same family. The executive directors are drawn mainly from shareholders. There are no non-executive directors because the company's legislation in Laszlo's jurisdiction does not require any. The executive directors are very successful in running Laszlo, partly from their training in production and management techniques, and partly from their hands-on approach providing motivation to employees. So that is one of the advantage of having an audit committee in case of Laszlo, because all the executive directors of Laszlo are from training and production and management techniques. So they do have expertise in production and management, not in finance. And there are no non-executive directors. So having an audit committee help Laszlo company to have at least one independent director who is having expertise in financial and audit related matters and can advise Laszlo in financial reporting issues. And read the next paragraph. The board is considering a significant expansion of the company. However, company's bankers are concerned with the standard of financial reporting as financial director has left Laszlo. So the bankers have a concern with the standard of financial reporting because finance director has left. You might have learned that having an audit committee increases the reliability of financial statement because it is being reviewed by independent directors and at least one of them have financial expertise. So having an audit committee can oversee the financial reporting process till a finance director is appointed, and it increases the credibility of financial reporting process. Now continue. Laszlo has an internal audit department. The chief internal auditor frequently comments board does not understand her report or provide sufficient support for her department or system of internal controls within the company. And the external auditors are appointed by the board of Laszlo. So having an audit committee is responsible for reviewing internal control. And the chief internal auditor has frequently commented that the board is not understanding her report and is not providing sufficient support and documents for her to conduct the internal audit. So having an audit committee provides independence to internal audit by reporting directly to the audit committee. And external auditors are appointed by board of Laszlo. We have learned that having an audit committee can propose who should be appointed as auditors, and the audit committee can review whether auditors are independent, pre-approve any non-audit services provided by the auditor, and verify if external auditor is conducting the external audit activities efficiently and effectively. So I hope you have understood the internal control deficiencies, how to explain it, how to provide a recommendation, and how to test the internal control. And I hope you have understood how to link the direct theory question that you might have learned in audit committee advantages to a given scenario. So thank you, everyone. Have a nice day and all the best for your September 2024 exams.